So you might be asking yourself, what's going to happen to mortgages now that the economy is taking a hit? Today I have two experts who are going to answer that for us. The first is Landy Garcia, who's been a loan officer for over 18 years, and the second is Jared Fenimore, who's been my hard money lender for the last 15 years. Let's go ahead and see what they have to say.
There you go. So
Awesome.
how's it going for you guys?
Well, that's the reason I wanted to get both of you on a call today, and I figured that we have obviously you, Landy, you're a veteran of the traditional mortgage industry, and I have Jared, who's a hot mess of the hard money industry. So with the two of you,
Say the least.
we're definitely gonna figure out what's going on right now, which may not even be the same thing that's going on next week, tomorrow, an hour from now, who knows? But
Correct.
it's worth us just getting some information out there to the public and so they can see what's actually happening. So let's go ahead and get started with you, Landy. I know that you've been doing this now for about 20 years, right? Going on?
Actually 18.
18?
18-year anniversary was last month. So yeah,
Congratulations, brother.
I've been around.
Good, man.
Wow.
So what's happening, man? Right now, today is March 24th, 2020. What is the latest news that you're seeing from your end? What changes are we seeing, and what do we need to look out for?
Right. So, what we've seen in the last 30 days is likely the most turmoil and volatility in the market, stock market as well as the rate market ever. I was fortunate enough to be in the business back in 2007, 8, 9, where, the market, basically flipped within a couple of years. And, there was just business was different, from one day to the next. So we experienced that in the mortgage rate market. On the residential side, we saw excellent rates. I mean, rates that we'd never seen before. On a Monday, it was 85 and sunny. Everybody was on the beach, and we woke up Tuesday to 4 feet of snow and a blizzard and 0 degrees. That was the best way to describe it. So since then, the Fed has cut the Fed rate, which is obviously the rate available to lending institutions, not necessarily the consumer. So creates some misinformation, creates hysteria for those people in process, those individuals looking to refinance or get into contract for a new property. I was getting several calls saying, "Hey, is my interest rate 0?" That's what the president said.
I was just going to say that, Landy. I've got those calls too. Everyone's asking, is it 0 now? I'm like, no, it's not.
Right. Exactly. So contrary to what anyone would think, that had the inverse effect on mortgage rates. So when lending institutions can borrow from the government to increase their liquidity, with the panic that has been set in by the media and by this health crisis, there's just been very much a fleet to safety from every lender. Not to mention that prior to the market, shifting, there had been a surge of over 50% in applications week over week. So, if you could imagine, everybody deciding to go to the same gas station at once, there's just not enough capacity for lenders to fulfill those applications, fulfill those rate locks. We saw many competitors, larger lending institutions just say, "Hey, no more rate locks, no applications." That's never happened, and ever. It's like you saying, "Hey, I don't want to sell any more houses." No, I don't want your listing. So I have too many.
Let me stop you right there and let's simplify that for the general population. So what it means to go to a 0% interest rate atmosphere, what that created was the inverse effect, which means that now instead of rates going down, they went up because more people requested mortgages, and because of the demand, the supply wasn't necessarily there, so the rates had to go up. Is that correct?
That's correct. That's correct. So prior to the Fed cutting rates, that had already been anticipated by the market. We saw interest rates in the low 3s on a 30-year fixed loan, mid 2s on a 15-year fixed mortgage, and that basically shifted by the minimum of a point from one day to the next, simply because of the fact that there was not enough capacity, not enough fulfillment support staff to put those applications in the process. So it completely, shifted the market. And what's happened is, because of all the fear that's been set in, because this is all unprecedented and we don't know what's going to happen next, the rate market hasn't improved since yet. We're starting to crawl our way back to rates that are reasonable.
Mm-hmm.
But again, in a matter of 2 weeks, we've seen in certain circumstances, depending on your criteria, you've seen rates increase from a point to a point and a half from what they were at the beginning of this month.
Okay.
So what do you do next? So if you're a consumer, you're looking to refinance to improve your financial situation right now. It's top of mind, right? Everyone's home and staying safe and follow protocol. But at the same time, we have a lot of individuals who are hurting from a financial standpoint. If you're in the food service industry, if you're not lucky enough to be able to work remotely, you don't have paychecks coming in, so you're living off of reserves. And refinancing is something that you may be pondering as an option. The approach that we're taking with all our past clients, and for those individuals who are interested in taking advantage of the rates once they do come back, is don't panic, get your application in. Let's get you in line to be able to lock in those interest rates when they do come back. Because they're definitely going to come back as soon as you start to hear positive news. The market reacts in a positive way, as it is today. So far.
The day's not over.
The day's not over. But as soon as we start to see that we're getting our arms around this situation, this health crisis, and we're starting to see things move in a positive direction, that positive news will translate into stability into the market, and the tensions will ease somewhat. And that's what people that study these markets have informed us as managers to translate that into, communicate that to our staff and to the consumers that, the world isn't ending. It's just that everyone's in a panic. If you're in process to purchase a property, for the first time ever, we're having to say, look, the rate's to be determined. Right? Go ahead, Jay.
I was just going to ask you, just because I heard, the president came on, they were talking about doing a 60-day kind of grace period in the world, not my space, but in your world. So I know you don't know the answer to this, but how is that going to affect if someone if they take advantage of this, right, and they don't make their mortgage payment for 30 days, 60 days, how do you think Fannie and Freddie are going to react to that?
Well, Fannie and Freddie and Ginnie Mae, FHFA, are working on putting out announcements for easing in underwriting guidelines, because currently you have many employers who can't complete verifications of employment because they're closed. Right. Individuals who have been told, listen, go home for 2 weeks, you have your job, but we're going to pay you, or we're not going to pay you, depending on the circumstance. There's standard operating procedures that just can't be complete. Right. To get loans to closing. So we're waiting on guidance as to exactly what that's going to mean. Is it going to mean I work for ABC Contracting, and an email from my manager who's sitting at home is going to suffice as employment verification? Something to that effect to accommodate the current situation, because if you don't have an admin in the office who can complete the information that's required in order to meet the standard requirements, there's got to be some in between that allows individuals to still go close on their transaction and not be hindered by the current situation. Appraisals are another issue. We have, because of the stay-home order that was announced over the weekend. You had appraisers who are independent contractors, and for the health and safety of their staff, they may say, hey, your inspection's postponed till we're going to get out there. And then there's other individuals who are going to take, the proper precautions and proceed. It definitely is a time where we're seeing so many aspects outside of our control impact closing times, impact the ability for us to get deals to the table within our usual time frames. But again, we're getting guidance sooner than later from the agencies who insure all these loans as to this is what we're going to accept. We've heard that there may be some easing in appraisal requirements altogether, as far as drive-bys, as far as the appraisal waivers, depending on the criteria of the loan. So there is some easing that is going to come into effect sooner than later, simply because of the fact that normal course of business can't be conducted. You have just so many variables that impact, how we can perform our duties.
Got it. But what it sounds like to me is that you guys are looking for ways to get around these external issues that you have no control over. It looks like your banks are still lending and the institutions are still buying these mortgages. Now, Jared, I know that on your end, it's come to almost a complete screeching halt. Can you give us some information on what's going on in the hard money world?
Yeah, I mean, our side is more of a Wall Street backed side. So they kind of dictate to us, what their appetite is on different paper. And as you guys know that, the rental product has come out maybe 12 months ago. The 30-year fixed rental. It's basically a non-QM, but we're doing it on this hard money side. When this whole thing came about, I guess 30 days ago or 3 weeks ago, we saw it then that things were changing a little bit. We all of a sudden changed the guidelines on it. They changed the leverage. We were doing 75% cash out, then we went down to 70. And then, but the bridge side, the fix and flip side, that really wasn't impacted too much until the government shut down. And then, once the local agency shut down, when we do a fix and flip loan, you put someone in a loan, if they have a rehab budget that they put together, and if they can't get a plumbing inspection, an electrical inspection, if they can't get all that, then it changes. It's going to delay the term of the loan, and then two. So what we did was we kind of saw that when the government. So that was early last week. So what we did was, everyone, all the funds, the Wall Street funds that buy these loans, everyone kind of changes time, and we incorporated a 6-month interest reserve. And that was, let's say, Monday of last week. So we were taking 6 months of payments up front from the borrowers because we wanted to make sure they were able to make their payments on time. By Thursday of last week, it was a 12-month interest reserve, the term of the loan. So it's you're basically paying all your payments up front just to avoid any defaults. And then, as of, yesterday, it's basically a complete shutdown everywhere. The rental products to, again, Wall Street kind of just closes the faucet, says we're not buying these right now. So if we close them, we're going to them for a while, and that's really not our business model anymore. It's, selling them out to the secondary market.
Yeah. So just to add to that, everything that's non-QM on the residential side has been suspended till further notice as well. So if it's not a Fannie, Freddie, or FHA loan, government insured loan, anything that that's tied to Wall Street has been suspended till further notice.
You can't really blame them. The volatility in the market. Interest rates on the residential mortgage side, on your side, is supposed to come down. They haven't. The stock market was kind of collapsing a little bit, and so you can't blame them if they don't. If everyone. I think what you brought up before, Landy, about, in 2008, 2009, I was definitely in the space then, and that was a scary time for everyone. And, no one really knows how to react to it. But I feel like a lot of, within the past year, we do a lot more on the non-QM, on this 30-year fixed rental product, and that is the one that's kind of scaring, I guess, all these Wall Street investors, and we don't know how to price them out, and that's what they're trying to figure out right now. So if you can't price a loan out, and that's why it's stopped on your side too. The banks don't want to close at 2.5% on a 30-year loan. Even if the Fed rate's 0. So, So we just have it's kind of the same effect on the rental product. But yeah, getting back to the fix and flip side, I think it's more of the title companies. It's I think the big title company, the underwriting companies, the First Americans, all them, I think from what I've heard, that they were loosening their guidelines a little bit on like rundowns 24 hours prior to closing. And that we were doing, they can do up to like 72 hours prior to, but so we're trying to loosen up those guidelines, but then with the government, you can't, if you can't record a mortgage, that's the other one that's becoming an issue. And the title insurance companies need that gap insurance now. So, right. And no one knows how long that gap is going to be. So it's just the unknown. I mean, we're not lending right now. So,
Right. So for us, we're lending, we're fully functional, again, we're taking applications, we're underwriting, we're committing loans. The third party portions of the transaction, i.e. appraisal, title, inspections, home inspectors are retreating as well. So you just don't have a full workforce when it comes to that third party sector that's vital to the transaction.
Yeah.
However, the overall sentiment that we have as an organization is that, this too shall pass. The difference between 2008 and this situation is that this is a health crisis. 2008 was a financial crisis. We don't have, years and years of bad loans that are going to default. We don't have the overinflated appraised values for years and years on properties and just false equity. We have a health crisis. And as the days go on, the government is aware of how important housing is to the economy, how much money flows from just what we do every day. You guys put people in homes, we help people finance, and the moment that individual closes on their home, they're out stimulating the economy. And they're at the forefront of understanding that they want to stimulate that sector of the economy as much as they can. So you've seen them make some unprecedented moves to try to shock the system. They feel like it's kind of on life support, and all of those moves will eventually have a positive impact on interest rates. However, until we get whether it be a vaccine or faster testing, faster diagnosis of those individuals who've been contaminated, or just a plan that eliminates some of the fear from the average consumer, where employers can reopen their doors and we can start to see that we're going back in the direction of some normalcy, we're going to be in a volatile market. That means a volatile rate market, a volatile stock market, and we are taking in applications. If you are employed, if you still, even if you're furloughed and your employer's telling you, listen, it's going to be 2-3 weeks before you can get back to work, don't wait to apply. The best example that I've gotten, because during this time where we're all at home, people get very creative. And, that one of my colleagues, I won't take credit for it, but he said, the great rates are like toilet paper. We're fresh out. You know what I mean? But we're expecting a shipment 3 weeks from now, so just get in line.
Yeah,
right.
So
once you're in line, you'll be able to lock in those rates when they come back to some of a normal circumstance, because the ingredients that are in the market we should be seeing rates in the low threes, based on everything that usually determines where rates are going to be. And then we're just a point higher than that at the moment. So, but we're inching our way back. There has been some improvement, and the market is doing better based on the president's commentaries yesterday about trying to get everything back to business sooner than later. So again, the health crisis is definitely creating some turmoil in our markets, but there are still plenty of available loans, plenty of available people on our staff to guide you through the situation, take your application and get you in the process, whether you're looking to buy or refinance. I mean, right now there's opportunity for individuals that are showing properties virtually, that are still working, for you to make offers. There's less competition. So if you're out in the market, there's definitely opportunity to, get into properties that otherwise wouldn't have 10 offers on them. Because inventory is still an issue. And again, can't emphasize enough that it's a temporary crisis for our business because of the fact that it's being disturbed by this health crisis, not anything financial. The economy was booming last month. it'll be booming again once we get past this.
Yeah, and one thing I just want to piggyback on what you said about this is not 2008. I mean, that took a couple years for us to get out. I mean, multiple years, and this is hopefully, 30, 60, 90, 120. I mean, Louis, you could probably elaborate more on what your take is on that, but we're going to start right away and back to the same. I don't know for sure if it's going to be the exact same products. We may have some changes, but we're going to be pretty close to it. It's just a matter of time. It's again 30, 60, 90 we're anticipating. So I don't know how that's going to affect the price value, the values of the properties, but hopefully it doesn't have too much of an impact. I mean, everything I've been hearing is saying it's clearly going to, but it's not my area of expertise. That's you, Louis.
Well, the only thing I can share with you guys is that no one is going to be able to predict what's going to happen a month out or a year out from now. Like Landy said, this is not a financial issue, but it's going to turn into one, because when you have 30% unemployment, which what they're predicting, and usually the media tends to be on the conservative side, if you got 30% unemployment, it's going to turn into a financial crisis really soon. Mortgages are going to default. A lot of issues that we had in 2007 and 8, we're going to see them again. They're going to reappear. And I do think it's going to be an opportunity for those who are prepared, but it's also going to be a really difficult time for a lot of families. So I do think that right now, the only thing that you can do is if you're unemployed or you're worried about becoming unemployed, is to educate yourself and make yourself more valuable. And if you still have a job, do that job better than you've ever done it before. Show more value than you ever have, and just show the company that you're irreplaceable. That's the only advice I can give people, because we don't know. We're uncertain. A year from now, Landy and Jared might be doing something different than mortgages. I might be looking for a different job too. Who knows? We don't know. All we know is that right now, today, what we can focus on is obviously delivering the best service and just trying to work on ourselves as much as humanly possible, and being there for other people who can't right now. There might be older people that who maybe tapped out or need some resources, and we have to just help out and pitch in. If you got an elderly neighbor, check in on them, see if they're all right. Some people are aren't that lucky, as fortunate as we are, and that's all I can say. We don't know. It's in God's hands.
Yeah, no, listen, it's definitely no one has a crystal ball. The logic would tell you that after the financial crisis of 2008, and how that impacted, every aspect of pretty much everything. Everything was impacted by that. And everything that's been indicated thus far by the media and financial news is that, they're basically going to kick the can down the road. Mm-hmm. Put as much money as the federal government needs to not have that happen. So I wouldn't be surprised. And again, that's above my pay grade, but based on what's been, what we've been informed of, is that they're going to be passing assistance in all different aspects, down to the self-employed 1099 employees, individuals who are obviously going to be affected by unemployment, a reprieve or some type of flexibility with them being able to defer some mortgage payments until the circumstances change. So all of that is definitely going to be in the works. Because otherwise, what Louis just described will happen. You know what I mean? Individuals who are living check to check, which is unfortunately the majority of our society, can't afford to have a financial change for 90 days and make ends meet their obligations. But I would be very shocked if the government doesn't take that into account and put something in place sooner than later, where you basically, and they have to make it, in my opinion, they'd have to make it very simple. Send over your mortgage statement. We're going to send you 3 checks. Something to that effect is what needs to happen. Otherwise, it'll be a very, very difficult situation for us to crawl out of if we start to see property values decline due to foreclosures and short sales, and the same thing that happened 12 years ago already.
Yeah. But let me ask you guys something. I mean, all of us were in were in the space back in 2008, 2009 and all that. I mean, does anyone really feel like we can even, fall down that hole again? Because I feel like this is just a temporary, in my opinion, but, because I feel like we'll be back up and running and like I said, 30, 60, 90. I don't know. I mean, I don't feel like this is anything like 2008, 2009. That was horrible.
No. So, and in my opinion, what the differences between now and then are that we had a secondary market that was buying pretty much everything and repackaging it and reselling it, repackaging it and reselling it. And all of a sudden that market changed. And we had a vast majority of homeowners in the United States with adjustable rate mortgages that they could no longer refinance. So when that started to happen, where you couldn't just refinance into another 2-year arm or another 5-year arm, and you were stuck with this new payment that was $500, $1,000, $1,500 more than what you were used to paying with no equity because you had consistently cashed out. That's not the circumstance now. Everything that's been written on the residential side for the last 10 years has been, I mean, we practically draw blood before you close your loan. Yeah. You know what I mean? It's there. Everything is vetted. There's W-2s, there's pay stubs. There's no doubt that individuals are qualified from a full doc basis. So the paper is good. The individuals.
That's the difference between then and now.
That is the key.
The paper is still good right now on Wall Street. The defaults haven't gone up as far as I've heard. So, that's the difference that, everyone stopped paying their payments back.
Right. And the main ingredient is the fact that everyone that is a homeowner jumped through some hoops to get that home. They definitely had to prove that they were qualified.
Yes.
So while the paper is good, that doesn't speak to the unemployment piece. You know what I mean? So the unemployment factor is huge, and the amount of assistance that they're going to get from the government in this crisis is going to be the determining factor as to whether or not we, again, 60, 90 days from now are just back to normal. Because if I am, John homeowner with, a set amount of income coming in to make my obligations every month, and now I am home for a month, and because I'm in construction or I'm in whatever the case may be, I'm cut down to what unemployment is. I need assistance today. Right. I need, in order for me to not go 30 days late on my mortgage, someone needs to either say, hey, don't worry about that for 3 months while we get out of this, or here's the check to cover it. It's one or the other. So once we see that happen, then we can kind of, at least for me, I'd say, all right, those loans aren't going to go bad. Those people will eventually be back to work. And that's going to be the first step in the right direction for these things to become back to normal. If that's delayed, if people start to feel that desperation of, I don't know what I'm going to do, then that's when you start to see signs that we could be headed in a direction that isn't good for anyone.
Right. I think you hit the nail right on the head with the fact that unemployment, that's going to be, all these people are out of work. What percentage are actually?
Listen to me. If interest rates were 1.99 on a 30-year fix, what does it matter if you don't have a job?
Right, because you're not getting a loan.
Yeah, jobs are more important than interest rates.
Yep.
Every single day of the week. And people have the security of that employment, that overtime, the income coming in. They won't have any hesitation in applying, being active in the real estate market. If they fear for their jobs, they're going to take what they have and retreat and, keep the roof over their head that they have. Why would I go from $1,500 in rent to $2,500 on a mortgage payment when my job's unstable?
Right.
Yeah.
I mean, you would think that most of these companies, and like whether it's in the big airlines, they want to get back up and running. If this virus is contained and we have a level of comfort, within the community, and then all the restaurants are open and we're back to normal. In a perfect world, everyone would be back to work, but it's just unknown right now.
Right. So my perspective is that, I'd urge everyone to take the proper precautions, stay home, follow the protocol. We don't know whether we're carrying this or not. We don't know who we came in contact with a week ago, 2 weeks ago that may have been carrying the virus, and it's uncomfortable. It's different. It's not what we're used to. But at the same time, by staying home and following the protocols, we're not only potentially saving lives from another individual who may not have the defenses that we have, but we're also aiding in containing this so that we can, return to the normalcy that we know, and that everyone can just, move past this. The more we see individuals just, brush this off as something that's not serious, ignore it. Every time that I see that, every time I go to the grocery store and I see people just, acting as if I'm overacting because I have my mask and gloves on, I say, well, this is going to add another 2 weeks because there's a few of you in here that are going to get sick.
Yeah, I mean,
you're not taking it seriously.
I'm down at the Jersey Shore, and I could see the boardwalk and the amount of people on the beach and the boardwalk. That's the only thing left that we have here.
Yeah,
the parks are closed. All the baseball fields are closed. We can't go anywhere. So, and people are dying to get out of their house. So, I feel like there's like that whole 6 foot, separation, but social distancing, but. There's a lot of people out. Today's a beautiful day. Yesterday was raining. I didn't see anybody. So,
yeah. Let me just jump in and say this, guys. What I'd like to piggyback off Landy, when obviously this is an issue that needs to be resolved sooner than later, to make sure we do try to preserve somewhat of a good economy that we had going prior to this. The reason why we need to flush this out as quickly as possible is because we have a majority of businesses are small businesses. And what that means is that small businesses cannot weather this for more than a few weeks or a month or two without any income. Maybe the big guys can, but the little guys can't. So if you've got the majority of small businesses not being able to survive, they employ the majority of people in this country. And if they can't survive, everyone can't go work for Amazon. So we definitely need to get this thing flushed out sooner than later. Stay home, take all the precautions. I hate working from home because I like to be out and about. It gives me energy, but I'm doing it. I have to do it. I've got people that I have to obviously see throughout the day, but I'm getting creative. We do our Zoom meetings. We go into our virtual world office, and we do whatever we can. So right now is a good time for you to learn new habits and be versatile, work from home, do whatever you can. And if the sooner we can all wrap our heads around that, the sooner we can all come out of this and we can get back to business as usual. One last thing I will say is that once we do get out of this, business will not look the same. Whatever we're used to, things are going to change. Everything is going to be different. There's going to be more technology, obviously, implemented into our everyday life, but there's also probably going to be a lot of more social distancing built into our fabric and our DNA, whether that is with, nightclubs or restaurants or whatever, but everyone's going to become a germaphobe after this. You're going to see a lot of differences going on there. And,
I agree, Lou. I agree. I think that, our normal social interactions are going to be top of mind because again, this is not something that we've seen before. Everybody, the flu is around every year. Everybody gets their flu shot, and it hasn't ever been something like this to kind of wake us up and say, hey, you guys aren't superior. It's not a joke.
Yeah.
You know what I mean?
Yeah.
You need to understand that there's things that can come about that can, change the way you interact with other people. So I feel like you're 100% correct. Where there's going to be a lot more virtual implementation over organization, and it has been. I think that I'm guilty of it. I'm not the video guy. I'm not all over social media because, when I came up originally in the business, it was, you got to go in and shake people's hands and create personal relationships. So, again, this is a learning opportunity for me to finally implement the things that are going to be standard. I think it's going to be definitely a different face to our business and the way business is conducted, simply because not only is it more efficient, and you can do it from the comfort of anywhere and get things done. But like you said, Lou, people are going to be, concerned about shaking your hand.
Yeah, when is that going to end, right? Like, yeah. I see someone that one of my neighbors, I don't even know what to do. Like, just give them an elbow.
Yeah, exactly.
I mean, that's today, but in 3 months from now, when it's over, I mean, if people when we start shaking hands again.
Yeah, Jared, why don't you let our audience know how they can get a hold of you if they want to be, I guess, in the loop about where lending is going to be, and whether in a few weeks or in a few days, in a few months, if they're still thinking about doing a hard money loan, so you can give more information. And then Landy, I'll let you close out also with your information. But go ahead, Jared.
Yeah, but you can go to firstfunding.loans, and on there you can actually you can register your name, and then we're sending out new weekly newsletters just with updates and things, where the market is, where we're trending, what we're lending on, what the guidelines are, just all types of updates. But yeah, firstfunding.loans, and just do the contact us form. It's on the right-hand corner. You can see it, and then you'll get on our distribution list for emails.
Thank you. Go ahead, Landy.
Yeah, so for any updates on just the market and anything that's going on, you can contact me directly, Landy Garcia, 908-553-5404. Real old school with the phone number. You can just shoot me a text or email, and I'll get right back to you. Email is lgarcia@ANNIE-MAC.com. I'd leave you guys with just a message of positivity. I think that we're going to be okay. I think that the government, again, is not surprised at their need to have an impact on how things go from here on. So I think that we're going to see some significant stimulus in every aspect to calm the fears of homeowners or prospective home buyers, to, again, not have the housing crisis repeat itself. I think it's vital to our economy, and I think that people that are, I want to say smarter, but just in position to make those things happen are going to take it to heart, and what we'll see things improve, or at least show signs of improvement and getting in the right direction sooner than later.
Yeah. All right. Thank you, gentlemen. I just want to leave the audience with a couple of words. I just want to let everyone know that right now is the time for you to just focus on your family and being healthy and staying positive, because if you are in a position of being a leader for anyone, and that includes your family members or your organization, they're going to look to you to be strong. So don't show sign of weakness, and don't show any fear, because fear will spread like wildfire. So right now is the time to really define yourself, and we can come out of this together stronger. And if you guys have any opinion on what the market could be doing, just leave it down below in the comments. If you enjoyed this video, please think about subscribing and sharing it with anyone who could benefit from it. Thank you guys for watching. We'll see you guys next time. Have a great day.
Thanks, man.
Thanks, guys.
Thank you.